All right, good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so very volatile week last week. Had a lot of big volatility signposts, so to speak. You had jobs on Friday, you had the Fed on Wednesday, and the ultimate result of that was you see the 100-day exponential moving average here held up as support. They danced and bumped, so you got Friday, Thursday. Wednesday was a very interesting day. That was the Fed. Where you had a lift up to the 50-day exponential in the area of the 20, and then it failed. Made a lower low versus the prior day, and a marginal lower low on Thursday. Unfortunately, the bears just, at the end of the day, couldn't really deal with that 50 to 50, 35 type of area that held. And then into jobs, they took it up, and then they ran it up higher, and they're making higher highs. You got the high of the moment right now is 51.74.75. So, setting all of that aside, you had this trading zone. The bulls have broken above the trading zone. They have converted the daily midband. So, one of the baseline assumptions we always talk about is, are we in a buy dips or a sell rallies market? We've been in a sell rallies market since this kind of slow motion battle and conversion over the green line, over the 20-day silver moving average back in early to mid-April. Bears won that battle. We went on a lower Bollinger Band ride, down as low as, 63? Yeah. Lows and higher lows have slowly been built up off of the top of that. But now that we've converted the green line again, we're back to being a buy dips versus a sell rally market. All through here, sell rallies, sell rallies, sell rallies. And there were some excellent rally sells, some excellent runners, some excellent, just some excellent trading. We're at the point now where, we've hit our monthly, in the first few days. Now, it's not exactly fair. I mean, people say things like that all the time. You got to understand, it's not very often that, there's two massive volatility events that come on the first 3 days of the month. And what do I mean? I mean the Fed and jobs, both of which had some really nice, trade. The Fed was very two-sided trading. That was a blast. And then you had a very strong day Thursday, very volatile day, and then they spent the vast majority of Friday just kind of walking this thing up to the upside. So. It's been a good tape. But we are now back to a buy dips mentality because of the conversion of that daily midband of that 20 days. So hourly chart, new weekly pivots there at 51.21.5. So let's zoom this in a bit. That hourly mid was good support Friday. It was what got broken above Thursday and then kind of held. As we head into today, I would expect it to get retested. The Bollinger Bands are a little tight, but at the same time, I mean, it's just a byproduct of it's the middle of the night. With the moves we've seen since Wednesday, I fully expect at least some portion of this week is going to be dedicated to the market just kind of resting, chopping it up. And we as traders, whether you're trading an underlying stock, whether you're trading the index, whatever it is you're doing, you got to understand, had a lot of vol, you kind of have to pay the check. And how do we pay the check? Well, you get a lot of chop, a lot of whip, and the market doesn't really go anywhere as the bands get tighter. So we had really tight bands heading into the Fed. Fell out of bed a little bit Tuesday, but the overnight bands, and Monday was miserable. It carried over into Tuesday. Then you had the move, and it was volatility city after that. You have to really think of it as an inhale, exhale, inhale, exhale. The market needs to inhale again. Those bands need to compress, and then they will expand. Compress, expand. And so we are headed back towards some period of compression. So be prepared for that. Yes, there are a lot of things going on in the world, but it is not Looney Tunes in the market. Okay, we all know what that feels like. You should if you've been doing it long enough. And it's not there. I mean, there are volatile times, there are not volatile times. It's actually in a decent rhythm. Expect some consolidation this week, though. Be realistic about what's going on. The new weekly pivot is jammed up down there, 51.21.5. You've got the monthly pivot down there at 17. And we saw, it is very interesting to me. This is May 1st. It is very interesting to me how much the monthly pivot tracks and gets touched on the first day of a month. More often than you would think. The green line down here is the 20-day simple. It's the daily mid-band. The turquoise line there, light blue, whatever you want to call it, is the 9-day. So my point is this. You got between 51.21 and 51.16. You have the 20-day, the 9-day, monthly pivot, and weekly pivot. That's a lot. That is a lot. And I think it's very reasonable in a compression expansion situation that this little zone of price is going to get a look this week. We'll see. Maybe it will, maybe it won't. But you can't ignore that much jammed in stuff on a chart. Now, the difference between us and a lot of people is, here's the list of things that I'm doing in preparing for this little chunk of price. Nothing. Don't assume anything. If you start making lower highs up top, there'll be a short there. If it goes all the way down there, awesome. Does that mean as soon as it touches, you exit it because it's some target? No. Maybe it'll go past it. Maybe it won't. Maybe it'll come in shallow. Just trade what you see. Understand what's going on in the bigger picture. But ultimately, you have to trade price. Taking anticipatory trades because you think, oh, it has to hit this area this week, that's how you end up like 100 handles in the hole with 5 ads, your entire account baked into some freaking trade that was supposed to be a 5-minute, move, and now all of a sudden you are an involuntary swing trader. Do not become an involuntary swing trader because you will be an involuntary, I don't have an account anymore trader. Be careful with that stuff. Be mindful of this, but trade what you see. All right, everybody. Have a great day. Be safe, be healthy, take care, trade them well. I am here at the desk. I am in town. There will be webcasts all week long. I will talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.